Hello and welcome to Fidelity Connects. I'm Pamela Ritchie. The Bank of Canada is holding its key lending rate at 2.75%. This is the first pause after several consecutive rate cuts, and Macklem cites Trump's tariffs for the decision to be on hold. Is this the end, ultimately, of the bank's easing cycle, or a short pause in light of global trade uncertainty? Joining us here today to unpack all of this and more is renowned economist Don Drummond. Don is former Chief Economist at TD Financial Group and current Stauffer-Dunning Fellow and Distinguished Visiting Scholar at the School of Policy Studies at Queen's University. Great to see you again, Don. How are you doing?
I'm doing very well. Well, other than the tariffs, like everybody else, everything else in life is fine, but tariffs are making life miserable.
Well, we're gonna get into some of that with our cup of coffee here today. We'll have to, certainly. We heard about the pause for now. What was really interesting, what seems to make headlines, is that there was no headline except a couple of scenarios that said they didn't know really, didn't have any grounding for what the future holds.
There are always clues in those long reports, 52 pages of what they have in their mind. And I read it and I didn't see a clue. And I thought I must not have read it properly. And I went back in the middle of the night and I read it a second time. There are no clues. I read all the footnotes, I read the annexes. There's no clues. And he opened up his press conference by saying there is so much uncertainty. We're not going to be forward looking like we normally are. So the clue is there's no clues. They're not going to do that. And quite frankly, I guess they don't know. I mean, Trump has given them the quintessential stagflation shock. It's going to depress output, which would put downward pressure on prices. But as we are retaliating with our own tariffs, that's going to raise the Canadian price level. So they're split. Which way do they go? And they note inflation expectations have risen in Canada. They're north of the 2% target. So that's got to worry them as well.
Although, I mean, we got a little bit of cooling. It was an okay report. The commentary going into the decision was that it really could go either way. Actually, what did you think of that commentary? I'm sort of curious leading into it.
Well, nobody likes the broken record, but if anybody looks over my shoulder, they'll see a turntable there, and I got my broken record on it. So here it goes. I keep coming back to the three underlying measures of inflation the Bank of Canada pays the most attention to. And yes, the headline inflation was fine, but the three measures, annual rate, 2.3, 2.9, 2.8. At least they start with a two,
Right.
but they've got a decimal after that. So despite all of this, and despite some weakening of the Canadian economy and a decline in employment in the last report, we're still not at 2% on those underlying measures. So that again, it doesn't give grounds for the Bank of Canada to go below the neutral rate. Fine to move down to the neutral rate, but they've done that. They're in the midpoint of the neutral rate. The inflation picture is not as favorable as we would like to think it was.
Well, you've gone to the neutral rate, so let's talk about that. There was a thought that there could be some resetting of what they thought was a neutral rate. I think you said it's only once a year they can do that. Is that right?
Yeah, they do that in the April report. I was anxiously reading that for my patience and waiting for the report to come out. I got one sentence: "We're not changing the neutral rate." It's still 2.25 to 3.25. I mean, operationally, we should think about the midpoint, 2.75. Guess what? That's exactly where their policy rate is. So we're at the midpoint. They're neither adding stimulus to the economy, nor are they expressly trying to withdraw stimulus from the economy. They're got their feet up on the desk, sitting there like the rest of us, wondering what Trump's going to do today.
So let's get into the tariffs themselves. I mean, we've heard the successive announcements, and there really is almost one per day. Not always about Canada, but sometimes. The tariffs themselves, you have said in the past, are going to just permanently change our output ultimately, and so I think you said, even a recession is something that you come out of again. The tariffs hold different cards. Let's go there a bit about what you see as being hit permanently.
Yeah, I've been doing a lot of media interviews over this, and I'm very frustrated because the focus is always trying to bait me up to the question: or is this going to put us in a recession or not? And I keep saying that's not the real issue. Recessions are a terrible thing, but they tend to drive us down, but we come back up. 3 or 4 years later, you're kind of where you would have been otherwise. This, if these, not even if they stay in place, but even the fact we've gone through this threat, and we know the US is not the reliable partner we once had, and the hit that's going to have to our business. This could and likely will lower permanently the level of output, employment, and incomes in Canada. That's what we should really be worrying about. And that's what we have to counterattack by strengthening the Canadian economy and improving our resilience and being less dependent upon the US.
Okay, so that said, we are in the midst of sort of waiting to see if there's going to be the election is one thing, and then further on from there, how this would be negotiated. Was there anything in the debates that you gleaned that gave you more to the platforms? We may not go into the debates too deeply here, but did you get more information in terms of party platforms walking in as less 2 weeks away, less than 2 weeks away?
It just confirmed that none of them, this is not partisan because I put that as a box on all of them. None of them either they don't get it or they're not willing in an election period to promote bold policies. So the biggest ticket item is a cut in the tax rate for the first income tax bracket. So that's where the marginal tax rates are already low. That's not where we're hurting the incentives to work, save, and invest. It's 15% in that first bracket. Anybody above $57,000 income is just going to get a lump sum reduction in their taxes. Big deal. That doesn't change the incentives to everybody. It's going to cost the liberals $5 billion, cost the conservatives $14 billion. That's a lot of money without any permanent increase in economic growth. Immigration, all they talk about is the number of immigrants. Well, what about the selection criteria? What about the integration process? What about our terrible procedures for recognizing foreign credentials, foreign education, foreign experience? What about this golden opportunity for some of the smartest people on the planet who are disenfranchised with the United States and their attack on academia and science? These are opportunities that we should be exploiting, but we're not even seeing that as a debating point. So I'm disappointed in that. Instead, we get, oh, we'll take the GST off this, we'll take the GST off that. That's not what we need. That's just wasting money.
Okay, so I think that covers the debates to an extent, and sort of what you thought of them. The two scenarios outlined by Tiff Macklem yesterday from the Bank of Canada, they were given because they don't want to provide anything more firm in terms of forecasting. Was there anything in either of those scenarios, one being quite dire actually, that led you to where they are thinking, what they are thinking about, basically how they're approaching this?
Well, my bad, but I was kind of shocked when I looked at their projections of potential output. I should have known they were going to be that low, and it's not just because of the tariffs. They've clearly, even in the scenario one, sort of tariffs light, they've knocked down their track of potential output, but they've really put the pen to paper on the reversal of these phenomenal population growth, the figures that Canada had over the last 3 years doing their immigration. And as the immigration numbers are going to be lower in the future, the hit to the growth. So if you look in their scenario two, the potential output growth for 3 consecutive years goes 1.2, 0.4, 1.0. I mean, we always think, Canadian economy kind of grows at 2%. No, these are very low. And it sheds a really bright light on the fact that almost all the growth we've had in the last couple of years has been driven by population gains. We haven't been going anywhere on an output per person basis. And then, of course, that sheds the light. Our productivity growth has been terrible, and our level of productivity is really dismal. And that brings me back to the election. That's what I want to hear people talking about and trying to address. And I don't hear that.
Does it sound like, so there's a lot of thoughts about how the parties and their various platforms are going to either spend or cut taxes, but ultimately um, give goodies. Do you see do you see that resources that the entire sort of natural resources sector of Canada is going to have to hold us up in the years ahead? I mean, is that one of the pieces of the tariff story, that until we get to whatever the other side of kind of recrafting our economy, is it going to be about resources?
I think there was a presumption until fairly recently the future would have a lower contribution from the resource sector. I think that assumption is no longer a valid one. But we have to keep in mind that our resource sector can be a lot cleaner. It is getting a lot cleaner. So I'm not suggesting we're just going to go back and we don't care about emissions anymore. Clearly, we have the natural resources, and including the critical minerals, all the more important because China has put on further restrictions on their exports of critical minerals. That's going to put the United States and the European Union in a real tight bind. we have to speed up our approval processes. And you'll see all of the political parties have said they'll do that. Easier said than done. We've been trying to tackle that one for a long time. We're going to have to change our transportation means. We don't have the means of getting the natural resources to our ports, and we don't have the adequate port facilities. So there's a lot of things we got to do. We have wonderful opportunities in clean electricity. We're well endowed with the resources to do that, but we need an east-west corridor to create that, and we don't have that. So we're going to have major changes in how we deal with the natural resources, and we're going to have to build the infrastructure and the supporting regulatory processes to advance that.
We'll come back to sort of the economy and where it needs to go, but these are directly about central banks. There's also been a tweet out today talking a little bit about um, the Fed, and I'll ask you to comment on that too. So the question is, do central banks communicate with other central banks around the world to gauge or to coordinate rates? I mean, they have in the past, or at least anecdotally. What's your thought there?
Well, in the financial crisis and going back to 2008, they were meeting every single day, and not on rates. I mean, there's certainly not an entity or one telling another one what to do in rates, but they did do liquidity operations, not so much in the same fashion, but they all kind of informed each other what they were going to do. They were all weighing what that's going to have on the global impact. They meet all the time, but they're not directly. And nobody told the European Union to lower their rate, and no one's telling the Federal Reserve Board and the Bank of Canada not to do it. But they're collaborating, they're sharing information, and needless to say, I'm sure they're all extremely concerned. The guy that's in the toughest position is, of course, the chair of the Federal Reserve Board, because not only does he have a great difficulty how to address the economy, but he's got a president that's constantly attacking him and just said yesterday his dismissal can't come soon enough. How would you like that? At least people like Tiff Macklem and the head of European Bank don't have their government on their back like that.
Right, right. Another question about the neutral rate. Are you confident? What are your personal thoughts on the neutral rate? Is it correct, for instance?
I think so. I was the one that came up with that concept a long, long time ago,
Really?
around 2008, and I got invited up to the Bank of Canada, where the deputy governors told me that I should have my economic degrees recalled. It was a silly notion; it would never be a constant. And the whole day was geared to the Mark Carney would join us in his boardroom for lunch, and he walked into the room, and his first words were, "I find the idea intriguing." So I glared at the deputy governors who had just shot me down in there, and the history shows that they'd embrace it. And of course, the deputy governors were absolutely right. It's not observable. The estimate would change over time. They thought that would undermine the confidence if they change it. And I said, you have enough confidence, you have enough credibility with Canadian with markets that you can change it with the proper analysis. And that's exactly what's had. When I first estimated, my first guess was 3.5. But
Really?
we hadn't, that was 2008, but we've had another long period until 2001 of stable and low inflation. So that should lower it over time. So the fact that the midpoint has come down from 3.5 to 2.75, I'm perfectly fine with that. I think it's as good as any other number. Again, no one can observe it. You can't say absolutely that's right, but I don't find any fault with their estimate.
Fascinating. That's really interesting that you were the one that suggested that. Glad to have you on board here, Don. We're very grateful. Okay, let's talk about the US dollar, which has a lot to do with the rate story. But it also, the chaos from tariffs has certainly seen that cratering down. And it all fits into the Fed chair discussion. But the US dollar, its trajectory from here, what do you think?
Well, first, this comment, we are seeing something we have never seen before, and we're seeing a flight away from all three US assets. One or the other has happened before, never all three together. We're seeing the weakness of the US dollar, we're seeing the weakness in the US bond market, and we're seeing the weakness in the equity market. And typically, what you would say if the dollar or the equity market weakens, you would see a flight into treasuries. And now you're seeing the flight out of all of them. This is a really strong message from the world and from investors in the United States. We do not like what you're doing, particularly for treasuries. They're supposed to be the bedrock of stability around the world. The United States, despite its all indebted, and people don't really like that picture. Nothing wrong per se with the US dollar coming down. It itself can more naturally try to address some of the deficit points. Wouldn't want to see them artificially push it down. I sure wish the reason it was weakening wasn't because of incompetent policy that's hurting everybody around the entire world. Don't like the means. The result of it doesn't particularly trouble me. I
Okay. So, that said, I mean, let's translate that into the Canadian dollar. Part of the reason the Canadian dollar, I mean, it's actually been holding up. I think to some people's surprise. Does that surprise you? I mean, these are all relative. Currencies are relative, but tell us what you think about the CAD.
well, I'm painfully aware that you can't look at purchasing power parity, i.e., the productivity comparisons, the competitive corrections, and have that as an accurate predictor of exchange rates, but it is the best underlying opinion that we can get. And we have sunk, our productivity is actually less than 70% out of the United States. Guess what? We actually don't deserve a very strong dollar. I mean, it all comes back to that, right? We go around and around in circles, and it comes back to that. We've had weak productivity for a long time, and in the last 5 years or so, it's went even further. And it's not like everyone else around the world is suffering this productivity malaise. We're doing worse than everybody else. Particularly, we've been doing worse than the United States. But, if you go back to the early 1960s, when the Organization for Economic Cooperation and Development started with the 24 wealthiest countries, we had the third highest level of productivity. And since then, they've added some pretty low income countries, and we're kind of in the middle of the pack now. We just keep sinking back. So that's our key. If we want to sustain a higher value of the Canadian dollar, we know what to do. We need to improve our productivity, not for the sake of the dollar, but to increase our incomes.
I mean, it's always been the question of how, and there seems to be a lot of different ways to slice and dice that one. But I mean, one of them certainly, you sort of want to ask the question because you're watching it in other places. Fiscally, they're trying to cut, obviously, in the U.S. programs, government staff. We're seeing that program kind of rip through government there. But I mean, is that part of the way to productivity to be bringing in sort of a faster way of getting things done? Technology, for
Yeah,
example?
yeah, for sure. But particularly if we're talking about labor productivity, the Achilles heel in Canada is weak business investment. Our Canadian workers just have so much less capital to work with than American counterparts and the counterparts in many other countries. And that's why it's interesting. There are no proposed reforms from any of the political parties of corporate income tax. Beginning in the early 2000s, that was my last budget, was the one in 2000. And we started the process of reducing the corporate income tax rate. We did eventually actually create a corporate income tax advantage in Canada's favor. That has disappeared as other countries, particularly the United States, reacted and cut their rates. We need to restore that. We need to improve the incentives to grow. We seem to like Canadian companies to start and then stay under 500,000 per year, and we give them
Well,
a nice
yeah, tell
cushy
us
low
about that.
tax
I
rate.
mean, that's exactly what happens. They sort of they stay smaller. That's the issue.
They stay small, or they sell. And, if we could put up on the screen a scatter diagram of Canadian companies by size, wherever that small business deduction limit is, you'll see a huge clump of companies just below it. Why? In the United States, you don't see that. They continue to grow over that time period. You look at our research and development tax credit. You get a 35% rate if you're a small company. You get a 15% rate if you're a large company. That is insane. Large companies do way more research, and they're much more likely to successfully commercialize. They're much more likely to export. They have higher productivity. They pay higher wages. Nothing against small businesses whatsoever. By definition, most companies have to start being small, but we should have much more encouragement to continue to grow. And that would be one of the things that would be in the platform of a political party, I would hope, but it's not there.
So, what is your thought for what the budget, regardless of who's in power, needs to hold this year, which they'll have to do at some point this year, probably not that far out?
Well, of course, the really annoying feature in trying to answer to that is you can't ignore the reality. We're going to have to devote a lot of our fiscal resources to protect Canadian industries and Canadian workers from the fallout from the tariffs. I sure wish we could have dialed up a different scenario.
You mean
That is
bailouts, like, rather than investing it, it'll have
I'm
to
not even,
initially go.
I wouldn't like to think it comes to bailouts, but some kind of supports that they can survive through this period. And there's going to be workers that are laid off. There's already workers that have been laid off. Some of the car plants that are shut down, hopefully temporarily, and thus affecting people's incomes. We have to address that. We can't just leave people in industries unprotected from that. But we do, we got a debt to GDP ratio that's over 40%. We got debt deficits are over 40 billion. We have to address that. We have to improve the efficiency of it. We have to dramatically reform our tax system. We have to bring down the marginal personal income tax rates. We have to bring down the corporate tax rates. We could get rid of billions of dollars of inefficient subsidies and sharpen the targeting of it. As people well know, when I do the shadow budget with a CD Howe, we throw into the mix a 2 percentage point increase in the GST rate, not to bring in extra revenues, but to help lower personal and corporate income taxes. The GST is much less economically damaging than the other taxes. And everybody said, well, we don't want that. And I said, well, it's a pretty tight box. You have to think of bold ways to get out of that box.
Well, say more about the personal income tax and what possibly could be shaved off with other measures coming to bear.
Well, unfortunately, the big ticket items, as I said, the Liberals' very modest tax rate cut is 5 billion a year, and the Conservatives is 14. But all they do is lower the 15% tax rate. In one case, the 14, the other 12.5. Anybody above 57, I mean, you eventually, as your income rises with the provinces, you're paying more than 50% of the last income you earn in taxes.
Mhm.
And don't we all have that kind of thought? You have a prospect of training for a higher paying job, to work an additional hours, do anything to increase your income, and your first thought is it really worthwhile? Because I don't even get to keep half of it. If you go back to the good old days in the 1960s, if you ever pull out your parents' or your grandparents' income tax returns, you'll see that they lost about one third. Not a big deal. We're over half right now. That's got to be reduced. I was abhorred by the prospect that they were going to raise the inclusion rate of capital gains, because first of all, almost all the taxation of capital gains, if you held it for any period, is purely an inflationary gain. You bought an asset 20 years ago, you're not allowed any inflation adjustment. It's gone up because inflation's gone up. You can't tax that fully. And we don't allow complete offsets for your losses. We have very restricted application of losses. So it was insane to talk about and the way they introduced it was such a short period of time that would only accommodate people that might have wanted to divest of public shares. You were too short a time for private shares, for real estate. And then again, I think, oh, geez, the people just really not get it? And that's sort of when you get, the populist streak. Well, that's gonna, we're bashing the wealthy and the privileged. Well, guess what? Those investments drive the Canadian economy. And it's not just poor people. As my colleague Jack Mintz has gone to pain, many people have large capital gains 1 or more years of their life. I mean, you sell your cottage, you sell a rental property. It's not just only rich people that have assets like that.
Right, right, and, the argument of why there hasn't been enough money poured into the economy is so much of it's gone into housing for such a long time, so it is
Right.
the area. You've largely, answered a question about productivity and if it's structural, from a lack of investment. Would you say yes to that?
The key is we have to have more business investment. And there's a devastating chart, which I had not seen that before in the Bank of Canada review. They do the survey of business intentions, but they divided the responses into firms that are heavily influenced by the tariff threat and those that are more isolated. And guess what? The majority of those not affected are intending to increase their investments, and the majority of those that are heavily affected by it are planning to decrease it. So again, you think, oh, why is this happening? This is terrible. So that's another very strong crosswinds to get where we need with the stronger business investment. Well, early in this game, at the end of December, there was a survey of large firms in Canada, and almost half said that they were planning on slowing their investment in Canada and relocating some or all of their operation in the United States. And that was several months ago now.
So that's got to be a corporate tax story. That's got to be a story.
Well, we have to think about how do we counter that?
Yeah.
And we don't have the advantage of economies of scale. I mean, let's face it, we're a very much smaller economy than the United States. We probably, everything else equal at infamous economists, we have to be more than equally attractive. And we can't just even have the similar corporate tax burden as the United States. We have to do something that creates an advantage because we have some crosswinds that the United States doesn't have.
Right. Amazing. Okay, here's a question for you. With inflation or a stagflationary environment, which is sort of what you were describing at the beginning of this conversation, what would it take ultimately for the Bank of Canada to actually have to hike rates? Like, where would that have to go?
Yeah, well, as much as the Bank of Canada rightly will tell us all that their mandate is to hit 2% inflation, they don't have the dual mandate like the Federal Reserve Board of Employment and stuff. They're not going to stand idly while a lot of Canadians are thrown out of work. So if we continue to see, we only had 1 month, I don't want to make a big deal about, but if we can continue to see the level of employment drop, they will drop the interest rates, even if there's inflation. I always think, when they're in those headlights and they face with a choice like that, they will go to protecting people as opposed to gearing everything towards the inflation target.
Even if it's not the mandate.
Even if it's not the mandate, they do have hearts, and we can't stand nobody can stand idly by when we see people for absolutely no fault of their own or any fault of their employers lose their livelihood and put their mortgages at risk, put their household debt at risk, put their futures at risk. So they would have to act in that. But let's keep in mind, this is not starting out at a really high interest rate. There's not that far that they can go.
Right. In terms of
And,
cushion.
they did do things like quantitative easing, but, all the empirical analysis of the US's ventures into quantitative easing shows they don't have a big impact, even on bond yields, don't have any impact on the short-term rates. So we shouldn't overload the expectations of what the Bank of Canada could do if they decide to act.
It's really interesting. As we kind of wrap up here, I wouldn't mind just an extra comment on actually mortgages and ultimately, I mean, 6 months ago we were talking about whether the mortgage renewal story and impact was somewhat ring fenced. A lot of things are different now. What do you say to those? All these renewals that need to come through this year and also next.
Well, first of all, we should note that we are so far doing amazingly well
Right.
in this transition. I mean, we have those people who hit the lottery a few years ago and snagged 5-year rates as low as 1.65. And even though the rates have come down again, they're not going to hit as bad as it appears. They're going to have big hits. And they're not defaulting. Not even that many are in arrears. And the Bank of Canada, in their financial stability report, noted that people seem to be pre-saving even to address this. I think we have a lot of kudos to send in the direction of OSFI. When they introduced those stress tests a few years ago, there was a big backlash. This was terrible. Everybody hated it. But yeah, it's kind of ironic when you think about it. It basically tested to ensure that people could pay the mortgage at rates that are similar to what are in place now. Of course, they didn't know that. I'm not saying that it was based on an accurate forecast, but I think that did everybody a favor. And so it's not over. There's still a lot of them still that are paying at the lower rates, but so far I think we're doing amazingly well. The housing market has held up, so even when a mortgage is in trouble, the mortgage holder seems to be able to sell the house without difficulty. So far, so good. But
That's what makes
there's always a residual. If you're managing to continue to pay your mortgage at a higher rate, you're squeezing somewhere else because your rate. So I do express my sympathy to the people. They're squeezing on goodbye the restaurant meals, and probably trying to find cheaper ways to buy groceries and stuff. Vacations, certainly vacations in the United States are way down. We know that. There's a saving.
so interesting. I mean, so far so good as a broad statement. Don Drummond, we'll leave it there. We're very grateful for the person who actually created this mid-range discussion. Didn't know that. To have you commenting on the Bank of Canada and all its myriad pieces that go into the decision, non-decision that they made yesterday. Thanks for your time.
Oh, you're welcome.
Thanks for listening to the Fidelity Connects podcast. Now, if you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. On fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on X. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.